non-resident investors held 25.5 billion cedis of Ghana's total domestic debt at the end of the third quarter of 2020. This represents 18.9% of the entire domestic debt. Now, rising domestic debt is due to banks increasing investments in government bonds and treasury bills. Here's Charles Nixon, your West report.
This actually is compared to about 25.6 billion cedis in the corresponding period of 2019, representing 26.2% of the share of domestic debt. There had been fears that a rising share of foreign investments in the country's domestic debt may not be a good idea, particularly in situations of global economic uncertainties. The non-resident investors could easily liquidate their funds, and that can put pressure on the cedi. Importantly, the Bank of Ghana's holding of domestic debt at the end of the third quarter of last year stood at a little above 31 billion cedis. This represents 23.1% of the total domestic debt. However, banks and other financial institutions held about 38 billion cedis of the local debt, representing about 28.2% of the total domestic debt. Indeed, they had increased their share by a little above 7 billion cedis in the third quarter of last year. This suggests that the financial intermediaries shored up their investments in government securities, particularly treasury bills, which are risk-free assets or carry no risk. SNIT's holding was about 395 million cedis, which is 0.3% of total domestic debt. Ghana's total domestic debt stood at 286 billion cedis at the end of November last year, with the domestic component at about 147 billion cedis, a little higher than the external debt component.